Ladies and gentlemen, welcome to our third live stream where we talk to very interesting entrepreneurs in the market. Today we have a very someone that I'm very excited to have, based out of Toronto in Canada. He is the co-founder and CEO of a company called Payfi. So he's a visionary product leader and fintech entrepreneur with over 10 years of experience in developing scalable financial solutions. He is the co-founder and CEO of Payfi, as alluded to earlier, and dedicated to revolutionizing property management by helping small landlords streamline their operations while enabling tenants with low or no credit history to secure housing and build credit. Previously, he was instrumental in launching Nigeria's first buy now, pay later solution, which is a checkout solution, and he's managed to process millions of transactions and drive financial inclusion in the market. His expertise spans product strategy, AI driven solutions, and fintech innovation. He's passionate about leveraging technology to solve real world problems and create collaborative ecosystems. And I must say that his bio is quite modest because he is also an alumni from Techstar, which is one of the biggest business accelerators in the United States. Ladies and gentlemen, I'd like to welcome Seun Sanni. Seun, it's an honor to have you on the show today. How are you doing?
I'm good. I'm good. Thank you for inviting me and having me on the show, and happy holidays to everyone.
Yes, yes. Happy holidays to you and family too, and to the Payfi team too. So tell us, I always like to ask entrepreneurs whenever I see a very interesting business model, I get close to understanding it better. And there's always a why. There's always an interesting story behind that. So, what would you say is the why behind Payfi as a business?
Uh, uh, I always get this question, and I'm always also excited to answer what the why is. So for me, the why is always about helping people who are underserved in one way or the other and have been pushed to the side because um, of their current financial situation, right? Being able to increase access to financial inclusion for people is something that very dear to my heart because I understand that when you have access to wealth opportunities, you can do a lot more as a community, as a group of people. So for me, everything I do is always at the center of how we can help more people get access to wealth and better financial services, even with the BNPL, right? It was about creating access to credit for more people who couldn't ordinarily get it because of their financial status, right? For us at Payfi, um, we understand how difficult it is for people with low or no credit history to get housing, the challenges they have to face paying months in deposits, having to look for guarantors to get housing. Now, what that does for you is that when you pay those huge sum upfront to a landlord because you're trying to secure a house as a newcomer, it puts a strain on your finances, right? And now that strain, unintended, makes you um, it puts you under financial strain such that you are having to look for jobs that which you ordinarily would not have done, right? Take for instance, if I came into Canada new and I'm here with $15,000, but I'm paying the landlord $10,000 out of that because I needed to pay 6 months up from because I don't have a credit score. I have 5K left with me, right? With that 5,000, I need to take care of myself and my wife, even if I don't have kids, right? It means that I have to start looking for how to pay the next bill. Because of that, I'm going to go get minimum wage job, as opposed to me taking my time to build certification, take professional courses, right? That would help me get a job that I'm very skilled at so I can earn well and settle into the country faster. So for me, it's the unintended consequences of how paying that so much money keeps you at the bottom end of the wealth ladder, right? So for us, it's being able to give people equal opportunity in any country that they find themselves. Just because I'm a newcomer doesn't mean that life have to always be difficult for me, right? And then with that, we said, you know what? People need to build their credit scores, right? Using just credit card alone or loan products to build credit is not a fair way to access everybody and give everyone an equal opportunity, right? People from my part of the world where I come from don't know how to use a credit card, right? Something new to them. But banks don't teach you how to use it, they just give it to you, right? They don't tell you there's a 30% utilization. They don't tell you that there's a statement date, these are the consequences, right? And then let's face it, if I've been paying my rent for the last 12 months consistently, it doesn't show up anywhere on my credit score. But if I miss $100 payment on my credit card, it affects my credit score negatively. How is that fair to anyone, right? So we believe that being able to use your rents to build credit and being able to give you access to get house without having to pay through your nose is a way to help you get access to financial inclusion and get access to better financial services with a better credit score. This was a thesis of how we got into helping people at Payfi with housing, especially tenants.
No, that's a really interesting story. I myself come from a country that is actually less developed than Mozambique, the Nigeria rather, which is Mozambique in Southeast Africa. In my banking career, I've also been involved in projects that are financial inclusion related, such as projects that do include expanding the scope of services that mobile wallet services provide in order to be more inclusive in the economy. So tell us a bit about your journey in the past. The part that I find kind of interesting was the solution you have provided in Nigeria, the checkout solution. I hadn't been aware of that side of your background because I knew you more from the Payfi business. Tell us more about that and how that journey was.
I believe you're asking about the BNPL.
That is correct. That's correct. That was very interesting.
Great. So the buy now pay later checkout was us trying to create access to credit for people who are employed but we're not working with say the top so the top you call it top percentile of the corporate world back in Nigeria. So the way things worked was I was working in the bank back in Nigeria. I worked with a Guarantee Trust Bank, one of the topmost, or in fact, it's the topmost technology focused bank in Nigeria, right? So at the time, we had electronics distributors in Nigeria. We got Samsung, we got LG, we got Panasonic. And what they did was, look, if you're a banker, you could walk into our store and walk out with any of our items, just issue us post-dated checks, right? And you'll be able to pay over 6 months. Because you're a banker in Nigeria, it's actually a criminal offense to issue a dot check, right? So that was why those guys believed in working with only bankers because they believed that your check could not bounce. And I looked at it and like the number of bankers compared to the population of people who are actually employed is very, very, very low. That means there are more people left out of this market that we can cover. How about we look for a way to bring on more people? Because at that time, people who earn twice, three times what I was earning would come to me and say, could we go together to the store so I can use your ID card? You can buy it in your name and use your check. I'll send you the money every month. I did that for a few people. Right. But this guy's earned more than me, but they didn't qualify because the store had no way of checking anything on them, their income, right? Or if they would be able to pay back. So I said, this is a problem for us to solve, right? There are more people who have been left out. So we started speaking to the stores and we found out that look, the stores are happy to do this for more people, but they just want their money. They want somebody to guarantee their money. So that was how Payfi was birthed, and then we stepped in as Payfi. We would we liaised, we became the middleman between the end consumer, the financing company, which could be a bank, some instance, we had some commercial banks as partners, and then the merchant. So we created a checkout tool that could do instant credit analysis on a customer at the point of checkout. So when customers come and then they go to the merchant's website to try to check out, right, in store or online, when they use Payfi, ask for some few information, right, and then the system will say this is how much you qualify for, and then Payfi pays the merchant instantly, and then the customer owes us, right, since we're willing to take the credit. And the merchant on the other side was willing to give us some huge discount because we're facilitating more transactions for them, right? So this is how we got started at the, how we got started at Payfi for the BNPL, right? It was from a problem that we saw, and then we were like, you know what, we could extend this to a lot more people. So that's how we started the BNPL checkout in Nigeria.
Well, that's great. I always find it interesting that on the fintech side of things, Nigerians and Kenyans tend to be the most innovative and the most adventurous. So when I first came across Payfi, my initial impression was that the main business model was around Payfi stepping in as the guarantor for renters, for tenants that didn't have a credit score. Once upon a time, that was me, but I've been fortunate to build a credit score quite quickly. I'm sure I haven't told you this, but I did live in the United States as a child. Obviously, I didn't have a credit history or credit record. So when I came here as an adult, that's a working adult, I didn't have that credit score. So in the first place that I rented, I had to put a couple of cash up front. So I was approved with conditions. So I wasn't approved based on my scorecard, credit score. And the mentality of a lot of property owners in the country is that it's better to have no credit than to have bad credit. So I fortunately was in a no credit side of things, and I actually subscribed to a service where for each rent payment it does build towards my credit score. So I was under the impression that you were the equivalent of this rental credit company that I work with, right? However, when I look closely at your business model, it's different from what I initially understood. So basically, from what I understand, this whole credit solution for tenants is almost like bait to build a database of tenants. So your real business is selling services to your landlord. So that was really mind blowing. So my question is that correct? And if so, was that the original business model when you guys launched this rental credit solution in the market, or did you pivot into that? How was that journey?
Very good question. Very good question. So the first answer, are you correct? Yes, that's how we started. Was that the original business model? No. Did we pivot into this? Yes, based on request and patterns that we saw in the market. So yes, you're right that we were an equivalent of that company that guaranteed and then help you report your rent to the credit bureau to build credit. Yes, that's how we started, right? And then just like I mentioned, I do think that the current um, metrics used to score the credit points are archaic and outdated. Here's why. Um, if you were to say uh, the credit score doesn't predict my ability to be able to pay my rent, right? It doesn't. What it does is to show that I have been diligent in paying up loans that I've collected up until this point, right? That's the data that you have.
Yes.
But we are saying that, look, how about we tell you that we can predict if this person would be able to continue to pay their rent based on actual economic situation that has nothing to do with this person directly. Say, for instance, AI in the next 6 months is going to wipe out an entire industry because everyone will start using AI for that service as opposed to using the humans that were employed.
Right.
You're a landlord and you're accepting a credit score from that person. You're not factoring this risk into it, right? You just say, oh, they'll be able to pay. But I'm only able to pay if I'm earning, right? So if I get laid off, how do I get money to pay? So we created an AI algorithm that actually is able to predict whether people would default within their lease period or not. That was the first thing we wanted to change from using a credit score. And this was something that would be helpful whether you're a newcomer or whether you're in the country. For instance, if I'm coming from Nigeria as a software engineer, if I'm coming to Canada and I'm coming to Toronto, based on the data that we have, within 6 months, you're likely going to get a job, right? So now it depends how much do you have in your bank account, is it able to take you those 6 months if you don't get a job so that you don't default on the rent, depending on how much your rent is, right? Now, this person with this kind of profile would score very low on our risk profile, and we're able to guarantee them, we say to the landlords, we would guarantee this person because we know that they will get a job and they will be stable. On the contrary, if you're a medical doctor and you come into Canada, it takes you about 24 to 48 months to be able to practice as a medical doctor because of the exams that you have to do and because of the training that you have to go through. A medical doctor on our profile is a very high risk tenant because they cannot find any other job to do. They've been practicing as medical doctors in the last 5, 6, 7, 10 years from their home country. They don't know how to work retail store. They don't know how to go be a Uber driver. They don't know how to go to Uber Eats. So they don't know how to do factory jobs. They have to look for job that can sustain them, something that they can do. So they have to learn something afresh. So it takes them a while to settle into the country unless they have a lot of financial reserves. So, right. Our system computes all of this and say, based on your industry, are you in a stable industry? Are you earning well? Are you going to be able to find a job? These are the predictive metrics that we believe should be used when it comes to housing. Same when it comes to taking a loan from a bank, right? But we'll come to that some other day, where we believe that credit score is a good metric, but you should use loan to income ratio. How much am I earning? Right? How much can I repay back? Um, am I getting a line to pay off my credit card? There are ways to, when we make the credit scoring more fair, what we'll do is that more people will get better credit scores and more people will get access to financial services, which goes back to what I was saying earlier about how to help people, right? So that's where we started from. That's the problem we wanted to solve. But as we grew into it, right, tenants started coming to us to say, well, if you're going to guarantee me, why don't you look for a house for me? All right, so that you can be both. So we're like, well, that's not bad if we can charge you for looking for a house for you. So we started speaking to realtors and landlords. Some landlords were excited, most were not, right? Because I mean, we're a new company, they don't know us. How can they even trust that we'll pay if somebody defaulted, right? So we started with the few landlords that we have and the few realtors that we had on the platform. Tenants will pay their rent through Payfi. We would help them report that to the credit bureau. Landlords will get their money. Tenants will get insured. Landlord is comfortable that the rent is protected, right? Their rental income is protected. Fast forward, landlords started coming to us to say, you know what? Since you brought this tenant, that means you have access to tenants, correct? Like, yes, like, why don't you give me an opportunity to be able to look for tenants from the number of tenants that you have? Because it's a problem for me listing on 10, 50 places just because I'm looking for a tenant. I've got to list on Facebook Marketplace, Realtor.com, Kijiji. I have to do all of this. It's time consuming. If you already have those tenants and they can go through screening on your platform, why don't you give me an opportunity to meet with them, right? I'm like, okay, that's not a bad idea. Then this request started coming in. So we started interviewing landlords just to know what the biggest challenge for them was. And we found out that first, listing on multiple platforms was a big problem for them. Filling vacancy because of those listings takes a longer time, right? Because they're not able to monitor it. You can find landlords if you're looking for a house, but landlords can't find tenants because they don't know where to go to find tenants. The second thing was that landlords needed protection. With Payfi, we would be able to give them an opportunity to report tenants' payments to the credit bureau. That way, landlords can be protected because today, if a tenant defaulted, you really cannot kick them out. It has to go to the landlord tenant board for arbitration. In that period, you cannot take rent, right? So all of this goes on and on. But being able to report the rent and the late rent payment or the default in rent payment to the credit bureau impacts the tenant's credit score negatively. So this makes tenants accountable, right? Landlords cannot do that on any platform, right? So they were excited that Payfi will be a platform giving this to them. So we're like, okay. The third thing is, when it comes to repairs, you have to make several calls to handymen and contractors to be able to even get one that would come do it, right? This is another time-consuming activity, right? With Payfi, we've built it in such a way, with the click of a button, you record the video of what the damages are, what the repairs need to be are. Post it on our platform, fill the information. You'll get requests from, you get responses from contractors, handymen with their quotes, and you can pick whichever one that you want to work with. So you don't have to be making tons of calls all the time because of repairs, right? And then the great thing about that is when you pay for that service that has been quoted for you, the money doesn't get paid to the handyman or the contractor until you are satisfied with the job. That's when we release the money again to provide protections for landlords. So this is how we got into the landlord space, and we realized that landlords were willing to pay us 2% of the monthly rent every month for to have access to the services as opposed to paying a subscription fee, which feels like you're tying them to something, right? Because the reason landlords do not use property management tools they have today is because one, it's a subscription based model. It feels like it's tying them to something, even when they don't have tenants. Payfi, we've got the listing is free. You can list for free, right? There are other things they can do on our platform for free. We give them access to be able to use automated spreadsheets. So we have an automated accounting tool instead of using spreadsheet to manage. We help them collect rents electronically. So all of those things that were a chore for landlords and that cost them a ton, because today when they contract all the services to a property manager, it costs them about 10% of their monthly rents. So we are doing this for way less and making it more easier for them. That's how we got into the property management side of the business. And we found out that we had a very, very strong position with us having tenants that landlords can find. So that's how we're able to make everything into one solution where tenants can come look for a house, landlords can come look for tenants.
No, that's really interesting story. So the part that really got my attention was when you mentioned the AI algorithm, right? So I would imagine that you profile the risk according to the profession, right? But when it comes to like prediction of the ability to pay rent, there are many complex factors, right? So let's say a very peculiar situation. Let's say I'm an immigrant. I migrate to U.S. or Canada. I have a job, and let's say I get a visa based on an entrepreneurial endeavor, right? So, number one, how would you collect, apart from the fact that I'm an entrepreneur, and I imagine that maybe you can confirm if you would profile an entrepreneur under a certain risk profile by default, or if there's additional data. How does the process of profiling the risk versus data collection work for you guys? So, what data would you assess in on predicting default? Because let's say if I'm an entrepreneur, the field that I'm in differs in risk profile. Because I could, own a bakery. I could be a tech entrepreneur. So how would you profile that? Maybe a layman's term, explain how you'd assess the risk to predict my probability of defaulting or not.
So there will be two sides to that, right? If you're an entrepreneur and you're new in the country, it means you've not started business. The only way to predict if you're able to pay is based on your bank statement, how much you've got in your bank, which we can confirm, right? That's the first way if you've not started business. However, if you start a business, we believe um there's revenue, right? There's money coming in, right? You have cash flow. So with your cash flow and how much you would be earning from the business, if you're earning, we'll be able to predict. Plus, would have to look at. I like that you mentioned bakery, right? Would have to look at it if your location, right? How much really can you sell? Can your business grow beyond this, or it has a very low limit where you really cannot scale much, and that helps us determine how much you're most likely able to make in that short period, right? But mostly today, the AI has not evolved into that fully, but mostly today you would be categorized as unemployed if you're an entrepreneur and would use your bank statement off of it to be able to predict um, what you're doing. So because when the AI sees not employed, because we don't have an entrepreneur, we have employed or not employed. So if it says not employed, it would score you as a not employed person, which makes you a high risk person as of now.
Okay, that's very interesting. So, in terms of the AI model, in your team, did you hire a specific talent that specializes in machine learning? How did the process of incorporating AI in your business model work?
Also, well, first of all, I'm a technical person myself, right? So, and then yes, we do have a data machine learning personnel in house that builds all of this, right? So, all of this is built internally. And then remember, I mentioned when we did the BNPL, we've been using AI for a while to also predict and then understand tool items that our customers are buying the most, be able to predict the season when they will come and buy. So we're already using AI for um, the other BNPL in Nigeria. So we just carried on forward with the AI personnel and continue to build into this. It's something we have the resources and we're looking to make the maybe about 30% of our business solely rely on this AI where maybe we're able to provide it to other um, property managers as a service that they can use to evaluate renters as opposed to just using credit scores.
That's quite interesting and an interesting development. So one question I like to ask entrepreneurs: you find entrepreneurs who are very averse to raising funds from venture capitals and investors. They want to retain the ownership. I've seen some succeed quite a lot of doing that. And then you find tech entrepreneurs who are pro raising funds because obviously a lot of tech businesses have very high burn rates and they need additional capital, which helps with the runway. So between those two paradigms, where do you stand as the CEO and co-founder of Payfi regarding the importance of raising funds versus aversion to raising funds?
I wouldn't say I have aversion to raising funds, seeing that I've raised funds for myself. But it helps at the early stages if you're able to bootstrap, lean, and then be able to figure out the market you're selling to. There's no free fund in the market again that allows you raise money to experiment and find out, except you're doing AI now, which is again. So fundraising itself is funny in the sense that VCs sometimes just run after um, rave what's in the moment, right? Now, if you build anything AI, they'll throw money at you, right? So you might be able to raise money as an AI company with just an idea, right? And then go build, right? It works for you because you're experimenting something that may or may not work and they are well aware of it, right? So in that sense, I strongly support that you raise VC money when it's available in the industry where you are so that you're not um, on the financial duress because the unspoken side of being a founder that fund affects, whether your personal funds or VC fund is, if you do not have enough funding, your business doesn't grow as fast, right? Um, it affects you personally because you're doing other things that will distract you because you need to make money, right? So if you're taking venture backed money, right, it helps you focus quickly and it helps you scale very fast. It helps you also quickly make some mistakes and go on. However, I strongly support that in the early stages, you should be very lean because I've seen a lot of situations where people throw money instead of solving problems, right? They throw money at it. If we hire this, if we buy that tool, well, no. Sometimes not having the money, most times, in fact, not having the money at the early stage, right? And the early stage means if you can build the MVP without having to raise a ton of money, if you can just do some family and friends around to get you to hire maybe one, two, three engineers if you're not an engineer yourself, maybe hire one product manager on part-time basis, right? To be able to get the first two, three customers if your product is that type, right? Do all of that so that you can show to people that look, there's a demand for what I'm building. I have customers already. Now I need your money to make the product more robust and to get more customers. And this is what we can become, right? So raise money if you can, if you're in the industry. So I have no aversion. It helps you grow faster. Not raising money would mean that again, you have money, right? So whether you raise money or not, I don't think that's the question. The question probably is, do you have money to fund your startup? So how you get that money, whether by VC fund or personal fund from family, is what should be important. In both cases, have money. I think that's what I've learned so far. I do not have any advice or leaning, but when you become a seed company, when you get to seed stage going forward, I think at that point, it helps that you should raise money so that you can grow very fast if you have a super growth tendency. Otherwise, the problem you face is that your growth trajectory becomes so slow that investors will pass you away and pump money into your other competitor that has raised money and is growing faster, right? I've got a few examples of that. About one company raised, was it $2 million doing the same stuff? The other company raised $30 million, right? The $30 million company has become a unicorn now, right? And the one that raised a million, I was like, you know what? We are growing well, and our revenue every month can sustain our expenses. They had a slow growth. They're still doing only about $2 million in annual in ARR in the last 5 years. They're profitable, to be honest, but you see, they're unable to grow because their growth rate is not attractive to VC money anymore, and now they need VC money to
Yeah.
show that. Yeah, so that's the other downside of it in this market. Yeah.
So that's sort of a chicken and egg example in a negative way. So as we wrap up, my final question would be this: you've obviously been an entrepreneur for a couple of years, and you've pretty much been out of a day job for 6 years, and so obviously there are probably people who are, let's say, full time employed and considering, being in your position one day, and there are people who are probably in college who are watching this and do aspire to one day become full-time employees, full-time entrepreneurs rather. So in other words, these would be like a younger Seun Sanni. So what would you say to such people? What one advice would you give to such a person? And that advice would apply to a younger Seun in this case.
It would be to start early. So I would speak to the people in college now and say, have a working plan. The plan doesn't have to be a hard plan that you have to stick to it, but it guides you, right? Um, I did say to myself, I gave myself three targets when I joined the bank. I said I was going to leave after 3 years, 5 years. And if I don't do it after 5 years, I'm going to wait another 5 years to be sure of what I would do. And that's exactly what happened. I couldn't leave after 3 years. At 5 years, I didn't leave. So I waited to have a new plan for another 5 years. So I spent 10 years in the bank and I left after 10 years, right? So it helps that you have that kind of plan early on. I mean, you don't have to wait 10 years now. That's the good thing, right? You can quickly focus after 3, 4 years, but it helps to, first of all, after college, go gain um, experience working for people, right? Whether it's a startup, whether it's a legacy institution, it helps you understand how decisions are made, why they're made, right? Um, you will need it. You will need it because you have to do a lot of man management, right? So I would say it's to start early and make as many mistakes as you would. That's what helps you understand what decision to be made and when not to be made. And if you're already employed, right, and then it becomes more difficult when you're employed because you're earning, right? Your lifestyle is probably built around that earning. You have savings. When you go into a startup, it will test you, right? Because your savings might get depleted faster than you plan. And then if you have no other source of income, if you are the type that are unable to, if you're not gritty and are not able to understand that all of these are in phases, you likely will be frustrated early enough and you will quit, right? Also, don't do it alone. If you can get a co-founder that can take off the burden off you, when two or more people are running, it helps you build something and you can talk to people when you're in that situation. Also, speak to people who have gone ahead of you, who founders who may be successful or not, but you hold them, you respect them, right? And they can tell you what worked for them, what didn't work. It also helps you. There's no need for you to make the mistakes that they've made, right? So that would be it for me. I think we should encourage more people to get into this. I like to say, when I talk to people, I always say that the way you increase your chances is to increase your multiples, right? If you're fishing in, if one person is fishing, right, that person can only catch as much fish. as much fishes, right? If you have 10 people, it increases the number of fishes available, right? That can be taken back to the village for people to eat. So my this analogy is to say that we need more people of color to get into startup space. If we have more people, there will be more failures, but there will also be more successes, and that way we'll be able to have more access to wealth that we can use to encourage and invest in other underserved founders to give them access, so that we continue to increase um, um, we'll continue to increase and encourage access for other founders who want to come on board, right? I think that's what I would like to part with is for us to encourage more people to get into this and say failure is not fatal, right? Uh, Give it a try. By default, startups fail 95% of the time, so the odds are already stacked against you. You don't need to bother yourself too much with that. If you do it right, good. You can do it one more time, two more times. So keep trying here.
No, thank you so much. And I must say that you've spoken to me directly. It just reminds me of the younger me. I wish the 22, 23-year-old me had heard this advice. Because funny enough, I did major in entrepreneurship in my honors in my last year during my degree. And
Oh, nice.
in my dissertation, I did do a study on the traits of the most successful entrepreneurs in the city. So I must say, I wish I did hear that advice. I wish I was less scared of betting on myself and learning from failures. But at the same time, I do agree that the work experience has been very, very good. I do remember from the study that I did, some of the most successful entrepreneurs in town had work experience as well. They understood the governance side of things, understood how companies are built,
Mhm.
understood a bit of everything, operations, the finance side of things, and eventually they built their own thing and they became very successful. So, nonetheless, I'd really like to thank you for coming on board. It's really been insightful.
Thank
Um,
you for having me.
really exciting to see from the outside, the traction that Payfi has built over the years. So, thanks so much for joining us.
Thank you. And then one more thing. I'm not sure we spoke about that. Payfi would be operational Q1 2025 in the US. So I will keep you updated on that as well.
Yes, please, will keep us updated. We'd be more than happy to share that with our community as well.
All right. Thank you very much, man.
Thank you so much, Shani. Thanks for joining us, and thanks to everybody who's joined us today. Have a blessed holiday season.
All right. Bye.